What is the trucking and freight brokerage market? Why do the rates go up and down? And why did it come down recently, and when is it going to pick back up again? We're going to cover this and more in this week's video. I'm Benjamin Kowalski with Freight 360, where we provide the latest transportation sales tips and training videos to help you reach your goals faster. If you're a fan of the content, please support us by crushing that like button and sharing us with all of your colleagues. For more information on our Freight Broker course, Freight Broker Basics, be sure to click the link in the show notes or go to freight360.net for more free training material. You've heard that the trucking and freight brokerage market moves through economic cycles. And the thing to remember about cycles is that they're circular. Just like a Ferris wheel at the county fair, they go round and round over and over again. They will always return to where they started before going through both ups, downs, and in-betweens. And just like a Ferris wheel, sometimes you're at the top on the way down, or you might be at the bottom on the way back to the top, just before starting the whole thing over again. So let's break down what causes the wheel to keep spinning. The 4 stages in the economics of the trucking market are: number 1, expansion. This is when the trucking market is growing and getting bigger. People are buying more things in the economy, businesses are hiring more people, more goods are shipping, and rates are going up. This is when many people will leave other professions to jump in a truck and start driving. Trucking companies will also hire and train more drivers, and freight brokerages hire more help to manage the increase in businesses. Think 2020, 2021 at the height of the pandemic and the rates in the market. The reason for this is because when we were all stuck at home and really couldn't spend money on services like restaurants and vacations, we bought more stuff for our homes, right? This leads to the peak. This is the highest point of the economic cycle. The trucking market is doing very well, and it's about to probably start to slow down. Because if very high rates are being paid in any market, no matter what it is, for too long, eventually the parties paying those increased rates, they start to buy less of that service or good being offered. And as the pandemic ended and we all started to go back to our normal day-to-day lives, we bought less goods and things for our homes. We began spending more money on services again. This is also why you're seeing retailers right now talk about reduced spending. But you're also reading that the economy is still doing pretty much okay, right? This is because as a society, we're spending more on services and travel that we didn't get to do during the pandemic. Also known in economics as pent-up demand, which leads us to the next stage, contraction. This is when the trucking market, and sometimes the entire economy, starts to slow down. Due to long periods of high rates, people, again, will start to buy fewer things. Businesses are starting to lay off people, and smaller companies begin closing. With less goods being purchased and shipped, there's less demand for trucking and shipping, which leads us to number 4, the trough. This is the lowest point of the economic cycle, the bottom of the Ferris wheel, right? The economy is the slowest and is about to start to get better. It's arguably where we are according to most economists. Rates are about as low as they can be without a trucking company or a carrier or a freight broker just flat out refusing to move a shipment or a load for the rates being offered by their customers. The important things to understand are really the motivations of the companies, the market participants that are involved here. Everything starts with the companies that need to move their freight, the shippers. And for large organizations that spent huge sums of money during the peak of the market and saw their profits damaged by those increased shipping rates, they see a down trucking market as an opportunity to make up for the profits they lost during the peak, right? Also, with consumers spending less money on things like TVs, computers, and home remodeling, there are less sales for the shippers and the distributors. After all, we can only buy so many TVs, iPads, and Pelotons. Shippers, right, are gonna try to make up for those lost sales by pushing shipping rates on their bids as low as they can until the market is gonna push back. Meaning, right, a company whose primary motive is to earn more profits they will continue to cut the price they're willing to pay on any expense until they can't do this anymore. Lots of carriers and brokers will argue with each other. Carriers on one hand will say that brokers are taking all the profits offered by shippers for themselves. Brokers will argue that rates can only be pushed to a point where a carrier refuses to pick up that load. And the truth is, they're both right and wrong at the same time. And the reason for this, right? So markets, they're made up of millions of transactions every day. And in addition to this huge number are the differences in the companies involved in those transactions. Some are trucking companies with newer equipment that they bought with large cash reserves. Some are one-man owner-operators that might have purchased a new truck at the peak of their price during the market demand, right? So that they could keep up with all the high rates in the market. Some can run loads for, we'll say $1.85 per mile and cover enough of their overhead for it to make sense, at least for a short time. Some think that anything below $2.10 is really highway robbery. And the truth is everyone is telling the truth. The problem is that everyone participating in the market has a different truth. Just like all people are different, so are companies. They have different balance sheets, different income statements, and different savings accounts, or retained earnings. Some have short-term goals, and some have lots of debt and lots of cash with longer-term visions. The big takeaway is that it's not apples to apples when comparing trucking companies. It's more of a fruit salad. Now, here's the silver lining. As shippers continue to push target rates on their bids far below what is sustainable for the industry to provide the services expected for those rates, eventually and inevitably, we are going to reach a place where it cannot be pushed any further. And the more we experience this pain, the closer we are to the other side. As more and more shippers are cutting and slashing the rates they want to pay to have their cargo moved, the more service interruptions and failures they're going to experience. Meaning that the less they're willing to pay for each load or shipment, the more likely it is that a truck rejects that load entirely. And the more trucks start rejecting the freight offered, the more of the shipper's contract loads will shift to the spot market for last-minute pickups. And there was a recent article I saw this week by FreightWaves that showed tender rejections are now at 6-month highs. So this is actually happening right now. Now, every time a load is rejected by the carrier or a freight broker that bid on it, the more the shipper will eventually pay for the same work to be performed. These are referred to as paper rates. Rates that have been submitted for a bid and they're really not worth the paper that they're printed on. And now that the shipper has less time to pick up that same load, the more of a premium they'll pay to a broker in the spot market. And this is good news because now the truck has the leverage and will earn a higher rate to move the same load from a broker. The broker will charge that shipper a percentage to call around and find a truck that can actually make that pickup in an hour or two, right? That's the open market. And then both the carrier and the freight broker benefit from the situation that the shipper created for themselves by trying to pay an unfair rate in the first place. This is what really creates the spot market in the first place. It's loads that come up last minute from additional orders that the shipper needs to move, again, with a short amount of time. And more importantly, it's made up of contract loads that were rejected by carriers that now need urgently picked up by another carrier, right? The economic incentives for shippers to save money on low rates now, right, eventually causes a situation that costs them even more when they push this too far. It's unfortunate that the market needs to endure more pain before it can correct. But it's the reality that the path to a better trucking market and freight brokerage market is through endurance and patience. So don't get frustrated when you're seeing rates offered that are below what any carrier or freight broker should work for. Realize that it's the silver lining in the market. Remember that shippers are motivated to make as much money as they can until they can't. And carriers and every other company in a capitalist society is in that same situation. The difference is that shippers still have to service their customers to generate any sales. And as soon as the receivers or customer that is expecting that load doesn't receive it, right? That phone is gonna start ringing, threatening to take their business to another supplier, right? This is what keeps the cycle of the transportation market spinning. Rates at the top, service at the bottom. Because rates always seem to be the most important thing until a load doesn't deliver. Then, service matters far more than price. A manufacturer, a distributor, or any other company that sells goods or things has to deliver them when they're expected if they want to stay in business at all. And when the customer that bought that product isn't happy because it didn't show up on time, the company that sold it to them and was supposed to ship it isn't going to be in business for much longer. For more tips on building successful freight brokerages, check out our website, freight360.net, for more information on our freight broker course, Freight Broker Basics, where you'll learn everything you need to know to earn a living as a freight broker and what it takes to build a successful freight brokerage. And remember, whether you believe you can or believe you can't, you're right.